Stocks gave up earlier session gains on Tuesday, and by late afternoon, trading on the S&P and tech-heavy Nasdaq hugged the flat line, while the Dow gained about 0.1% after a downbeat close to the start of the week. But investors are weighing whether a pullback is coming after a red-hot surge put stocks on course for their best monthly performance in more than a year. The bullish sentiment comes as investors place bets the Fed is done raising interest rates. However, two members of the Fed have signaled the central bank might need yet another hike to further bring inflation down. Treasury yields fell on the news, with the 10-year yield dropping about 4 basis points to trade near 4.35%. However, Deutsche Bank economists are projecting 175 basis points in rate cuts in 2024, with two first quarters of negative economic growth and a rise in unemployment. This should ease inflation with a return to growth in 2025. Currencies were mixed, with the dollar sinking to its lowest in more than 3 months on Tuesday, as investors continue to take the view that growth in the world's largest economy is starting to slow down. The dollar fell as far as 102.60, the lowest since mid-August, and on track for its worst performance since November 2022, with a loss of 3.6% in November. In other currencies, the euro rose to a 3.5-month peak of $1.10. Sterling also gained, climbing to its highest since September 1st. The pound was last up 0.4% at $1.27. The dollar fell 0.8% to 147.49 yen, with the Japanese currency continuing its recovery from the brink of 152 per dollar earlier in the month. The dollar also slid 0.2% to 0.88 Swiss francs, its lowest level since the start of September. The offshore yuan was little changed at 7.16 per dollar. Gold steadied near the highest level since May, closing at $2,017.82 an ounce. In commodities, oil prices gained as the dollar weakened and as investors await this week's OPEC meeting and expected slowing on supply in 2024. Brent crude futures traded below $81 a barrel. And in cryptocurrencies, Bitcoin rose nearly 0.3% to $38,228. Meanwhile, Russia's SPB exchange says it will transfer almost a third of clients' funds held in foreign currency to them in rubles, as U.S. sanctions block access to the rest of the funds, at least for now. Earlier this month, the U.S. Treasury targeted SPB as part of a sweeping new measure that also aims to curb Russia's future energy capabilities and sanctions evasion. This forced SPB to halt trading of shares on the exchange and to tweak its strategy to focus on settlements in rubles. Two key batches of economic data are due later this week. On Wednesday, an update on GDP in the third quarter, and Thursday's PCE reading on consumer inflation will set expectations for policymakers' next rate move. The Conference Board released new data showing consumer confidence increased in November to 102 in November. That's up from a downwardly revised 99.1 in October. But the expectations index remained below 80 for a third consecutive month, a level that historically signals a recession within the next year. Investors are also paying close attention to how retailers are doing following Black Friday and Cyber Monday. Consumers spent $12.4 billion online for the latter. That's up nearly 10% compared to last year. At the same time, U.S. annual home prices growth accelerated again in September. Home prices were up 6.1% on a year-over-year basis. That's up from an upwardly revised 5.8% increase in August. This news has been brought to you by VEVOFX. Thank you so much for watching. We wish you profitable trading, and we'll see you soon.